I've got 5 brand new, really important financial headlines here for you today. I want to see if you guys can pick up on the theme of what all these headlines are telling you. These are the ones that stood out to me that I think will help you a lot to understand them. They're relevant, so I pulled them out, and then I realized that they're all telling the exact same story. So see if you can pick up on the theme. The New York Fed just reported that credit card and auto loan delinquency rates are now higher than before the pandemic. Will things get worse before they get better as student loans come due? And you know that student loan payments are kicking in again, so people have that new weight on their shoulders. They didn't have to pay their student loans for a while, but now they've got to go back and pay the student loans. This is all part of what's making it harder for people to live and afford their lifestyle. And then you see it play out or manifest in auto loan delinquencies, mortgage delinquencies, all kinds of defaults and delinquencies because people have a hard time paying what they owe. U.S. job growth slowed sharply to 177,000 in August, below expectations. Job creation in the United States slowed more than expected in August, a sign that the surprisingly resilient U.S. economy might be starting to ease under pressure from higher interest rates. The firm reported Wednesday that private employers added 177,000 jobs in August, well below the 371,000 added in July. And economists were expecting 200,000. We got 177,000. Bitcoin trading volume is at its lowest in more than 4 years. That should be expected partly because it's the summer, but if you look at it over the years, it's still low. An analyst for crypto quant data from both spot and derivatives exchanges shows that the volume of Bitcoin held on all exchanges is at 2019 lows. It's now off the March high of 3.5 million Bitcoin. On August 12th, trading volume fell as low as 112,000 Bitcoin, its lowest level since November 10th, 2018. Evergreen shares plunged as much as 87% as trading resumes after 17 months. 87% decline. That doesn't even take into account all the people who had paid for a house and they just didn't get the house and they've lost their money. People who didn't have a place to live. People who are absolutely left destitute in China. So the 87% decline in the share price doesn't add all of that. But this is also, in addition to that, the share price coming down that much. Should have fallen even more? Probably, but it's just a complete wipeout. Bed Bath & Beyond shareholders left holding worthless stock as bankruptcy hearing approaches. And I wanted to say about bankrupt shares, you can trade them. What happens is a company goes, we're going bankrupt, they're going to go into restructuring. The current shareholders lose 100% of whatever value. Those shares eventually expire worthless. But there are a few months or weeks where you can still trade the bankrupt shares. And people do this, where the company declares bankruptcy, the shares drop 80%, and then the bankrupt shares keep on trading for a little while. And some people can make some money on a bounce from there. Most people will lose money. And if you own shares and you're not getting out of them, you're going to lose 100% of your money. Those shares will expire worth zero. Without recovery, the company's market cap of $152 million essentially boils down to nothing for common shareholders. And the SEC said in April that trading in shares of the stock during the ongoing Chapter 11 cases was, quote, highly speculative and poses substantial risks. When you have shares that go bankrupt, in my theory, my opinion, what I generally would do if you're in that situation is immediately sell them and take the nickels out of the money you invested, because you get the nickels or you get zero. Even if you're cashing out on a major loss, which of course you would be, you'll still get a little bit of the cash out if you do it before the actual official bankruptcy proceeding. You might have realized that all those headlines are in the same kind of financial vein. They're basically saying that everything, unfortunately, everything I've been saying for so long now that has been leading up to this point is starting to play out. You're seeing it manifest now in the economy. You're seeing more defaults, more bankruptcies, less retail trading activity for Bitcoin, for stocks as well. More bankruptcies, fewer jobs. It's all turning the corner. Everything I've been telling you guys for years now is all playing out. It's all coming together. As we head towards what I believe will be a serious recession, at least, or worse. The good news is that there's plenty of things you can do to set up properly. By knowing all of this ahead of time, you would have made different decisions and avoided certain risks and dangers. That's why you guys saw what I've done. I've gotten out of all kinds of speculative stocks, all kinds of stocks besides commodity stocks over the last few years. And that helped me avoid a train wreck when all of these stocks started coming down, or when Bitcoin was at 70,000, now it started coming down. I told you everything's going to come down together. But the one that has surprised me so far, has been resilient so far, is real estate. I believe real estate prices have a lot lower to go. I believe that the unemployment rate has a lot higher to climb. I believe the number of defaults, delinquencies, and bankruptcies will only continue to climb as we're seeing now. So it's very important if you want to land on your feet, help yourself, help the people you care about on the other side of all of this, that you educate yourself, plan, understand, prepare for things. You can do that by following the Peter Leeds YouTube channel. We've got a whole bunch of free learning tools for you over at peterleeds.com.